Stop overreacting to power movements and pay attention to the levels because that's where the opportunities are. Now, look, I get it, people. Yes, the market's been selling off a bit, and people are all bearish right now. You see it everywhere. People are talking about, Bitcoin going to zero. But here's the thing. You can't overreact to the hype. You have to pay attention to the bigger picture structure, and you have to have a plan, right? Because even if you have a plan, right, everyone has a plan until they get punched in the face. Your friend Powell, he threw a wrench in the machine here the other day. And this entire thing is what I like to call a Powell movement. And you can't be thrown off by it. Yeah, he made some hawkish comments that were not expected. And remember, in this game, it's all about perceptions of the future, because that is how the market processes information. It prices in the future, and Powell kind of changed things a bit. People weren't expecting those type of comments, right? So we're going to talk about in this video. I'm going to prepare you for what kind of scenarios we're looking at over the next couple of weeks and what levels you need to be most aware of so that you know how to adjust to this environment. Let's go! All right, so before we get into it, let me just tell you a couple of things. Please do me a favor. Press the like button. Subscribe. You'll find the links in the description of this video. You can see right here. Okay? Subscribe. Like. Great. It helps out the channel a lot. Also, real quick, as you guys know, I am running a fully public trade challenge. Right? Here, let me show you on the live screen over here. It's a $10,000 to $100,000 trade challenge. And all the trades are logged on this platform, Profits Precision. But as you can see, I am not looking to overtrade. I am not looking for high frequency trades. This is not a day trade challenge. This is a swing trade challenge. And all the trades are going to be shared, and all the signals and everything else in the Telegram channel. Again, you can find that in the links that I just showed you here. I'll show you again, just in case you missed that. There, check it out, okay? That's where you can find that. But again, we have a couple of trades in play, right? We had 3 trades. 2 were winners. 1 was a losing trade. Hey, it's not going to be perfect, but that's the way this game works. All right, you got the message. Let's move on. So before we get into the charts, got a couple of news items to go through here. All right, look, your friend Fink. Everyone loves this guy. Oh, he's a little uncomfortable now, huh? A little uncomfortable there, Fink. Well, yeah, his company and several spot ETFs just sold off, $817 million in Bitcoin? All right. Look, don't overreact to this stuff. I mean, look at him. He looks like he got a little too much of a tan there. But I'm telling you, man, don't overreact to this stuff. Yeah, these kind of things happen, and you can't take this literally, right? Because again, when these type of things happen, it's just a reaction in the market. Yeah, I understand it looks bad, but you have to just take it with a grain of salt, really, because this is the kind of stuff that plants the seeds of opinion. Now, check this one out. All right, so Bitcoin pulls back to a 9-month low of 81,000 as geopolitics, tariffs, and tech anxiety. Okay, great. All right, again, you should be viewing this as an opportunity, right? Because it is when chaos is everywhere. That's where true opportunities are. Not when things look their best, when things look their worst. And when you see headlines like this, you should be paying attention. If you're in a position, hopefully you haven't taken a position too big. This is why I emphasize on this channel and in the other stuff that I do, you don't want to buy too much too fast. You have to have a plan when you're developing, when you're actually growing positions and dollar cost averaging, and that takes some time, right? That's why we talk about these bigger picture levels on the channel. Don't get thrown off by news items like this. Then we got this booty cheeks. You know what this is? This is the classic Powell movement. All right. You don't want to have a Powell movement because look, the guy came out, he threw a wrench. Obviously, he's leaving in May, right? He's going to be part of the unemployment statistic. And this is his little gift he left to the market. And, his friend Trump, because Trump loves him so much. So that's a Powell movement, people. Again, when people see charts that look like this, I mean, what is this? I can't even read that number there. It's so big. All right, and it's below 82,000. Yeah, okay, so the leverage, all the people that are using leverage, they get hammered and they get margined out, and this is what it looks like. Don't overreact. This is when, retail and everyone else, they had positions too large, and this is an opportunity you can accumulate some at good prices. This is like when, food goes on sale at the supermarket, your favorite food, like, it's half price. Now you buy it. You buy as much as you can because next week it's going to go back to the regular price. The market isn't that simple, but it's the same idea. All right, let's move along here, shall we? So let's get into the charts. Now, we're going to begin here with the Bitcoin 1 week chart because this is the bigger picture here. Let me clean it up for you. Let me make this a little bigger so you can see it more clearly. Now, we got three key levels, three key areas on this chart, which I've been talking about. And you have to understand, the market can do anything. It's going to do whatever it wants to do. So you have to be prepared for all scenarios. And in these type of situations, you have to realize that it's a game of catalysts. And, the FOMC meeting with Powell the other day, that was a key catalyst. Those are where market turning points can occur or a major break or, rally can occur. Well, we got the break. Okay, no problem. But here's the thing. We haven't broken any key levels. 95K, 93 to 95K was the resistance we came off. Yes, it's a lower high. Yes, it opened up possibilities for bearish scenarios. But here's the thing. We are now at the major key area. There's an order block here. And not only that, 80K historically, even if you don't know anything about order blocks, there were touches way back here going back to like March. What was that? March of 25, where there was previous support. So you better believe that there's a likelihood of that support repeating again. So what we have here essentially are three scenarios, right? So scenario one, hey, that one's over. We never broke above that 95K successfully and retested. All right, no problem. Now we look to scenario 2 and 3, which we've talked about. That's why I've shown this chart before. We are now pulling back into the 80K, 78K support area. It's an order block and a major support. If price maintains itself above there, hey, that's what we want to see. If it goes lower, we're looking at a more bearish scenario. Let's talk about that. We can look at that on smaller time frames. So let me move along here and let me fix this chart for you. Okay, so on the daily time frame, yes, the bearish scenario has been activated. The trend line has been broken, right? And we've talked about this many times. This was that 88K, 87K area, and now we're pushing below. But look, again, we haven't cleared 80K, right? So really, if 80K is compromised, then it opens up the possibility of this next bearish target, which is the 78K area. If 78K is cleared decisively, we're looking at 73K. Those are the levels, right? Again, this is not about knowing where the market is going to go or thinking you know where the market is going to go. It's letting the market reveal what it wants to do. In this case, okay, we broke the trend line. No problem. I get it, Mr. Market. You want to go lower. So this is great for smaller time frames. If you're a day trader, it opens up possibilities there. But if you're a swing trader or a larger time frame investor, this is not a place where you want to get bearish because you're pushing into major lows where the bigger picture buyers are sitting and waiting, have been waiting patiently for this type of opportunity, right? So don't get caught up with what you see. You have to think ahead. Let's move along here to the next chart. So what do we have here? The 4-hour Bitcoin chart. Let me open this up for you. And again, I went over this chart yesterday. You have multiple scenarios with this liquidity run, right? We never got the upper one. We got the lower one. All right. Bitcoin has made its choice. Again, it has opened up the bearish scenario on larger time frames. So in this situation, we may get the lower high. Watch for that lower high around the, 86 now? 86 area, which is basically equivalent of the 86, 87 old support, now potential resistance. This would be good for smaller time frame or maybe more aggressive swing trades on the short side if it gets back up there and offers a reversal to go short, right? You want to pay attention to that sort of thing. But if it pushes above, closes above, and consumes this liquidity, especially if it makes it back up to, the 90K area, that's when the structure begins to change, again, more toward bullish. That's why you can't get stuck on a bias. That 90K area is a key area. So in this situation, watch for the retrace into this old support, new resistance for a potential short idea if you're aggressive, or wait for the rejection of that and then failure to go lower. Again, we have a number of reports coming out next week that can lead to that type of scenario, right? We have things like non-farm payrolls and stuff like that. All right. Let's take a look here now. We have the Ethereum weekly chart. We're going to jump over to Ethereum. Remember, Ethereum is highly correlated to Bitcoin, so it's going to do a similar thing. Whatever we see on the Bitcoin map, you can use that to trade Ethereum as well. All right, so let's get into. All right, so we're going to be brief because I don't want to make you tired here. So now, again, lower high, lower low into this 2214 area. Right now, that is the objective. So yes, I know I've talked a lot about Ethereum long, this and that, but the support breaks. Hey, it breaks, and we have to adjust. So keep in mind, we may get a failed low at that level. We have order blocks there. We have a number of reasons for Bitcoin to bounce up and for Ethereum to bounce there. It's going to be a matter of catalyst, but you have to watch the price action first, because if the price action firms up, then that's your sign. If we can push above 3,000 again, that's going to be the change of structure, and that's going to open up the possibilities on the bullish side, right? So right now, look, there's no hurry. You can just sit back and wait. Let the market do its thing. If you want to be aggressive on the short side, hey, you're going to be taking a little more risk because you're shorting into lows. If you're going to sell something like this, really, you should be looking at resistance levels, not support levels. Because while Powell threw a wrench in this whole thing, fundamentals aren't dramatically bearish, and you need to understand that, right? You need to understand that because, again, if we get some inflationary report or something else coming out next week, the perception changes. So just keep an open mind. That's the main piece of advice I can give you on something like that. All right, let's take a quick look at the next one here. We got the Ethereum on the daily time frame. So let's just review this one real quick, and then I'm going to wrap this up. So again, if Ethereum holds these resistances, right? Look, we have an order block sitting above. We also have a fair value gap. If you don't know what those things are, you can simply Google that and you will find that information very quickly, and you'll get a better idea. Or you can just go to my Telegram channel or just keep watching. And if you don't know, hey, put it in the comments. I'd love to hear what you think. I'd love to hear about the techniques that you use and your perspective as well, because I read those comments, and that's great stuff. And by the way, Sean, I would love to do an entire video in the Michael Saylor impression, but I don't think the guys that my team here would appreciate that too much. So anyway, my point is this. So we have watch these resistances above. If they are respected, then Ethereum still has the bearish bias. Watch this support at this 2622, because that is still the objective. We're almost there now, but if we bounce and reject that resistance, that becomes your objective again, especially if you take a trade on that information. All right, so with all that, remember, guys, all these trades for this challenge and everything else we're doing, they're all done on WeX. So if the link is in the description, check it out. If you don't have a platform, and if you're thinking about opening up a platform anyway, it helps out the channel. You're supporting the channel by taking trades through WeX. And also keep in mind, we're using Profits Precision to track all these trades. It's a great journaling tool. You could really learn a lot about yourself using such a tool, so I recommend you check that out. And don't forget, we have the free Telegram channel, because that is where all of the action happens. You can get all the daily updates, everything else we do in that channel. You'll find it in the links in the description. Check it out. All right, so other than that, people, hey, I really appreciate you sticking around. Don't overreact in this market. Don't get caught up in the hype and think Bitcoin is just going to keep going. It's a very common mistake. You have to think like a contrarian in this game, and that will help you prepare. Whether the market chooses to reverse or not, or go lower or not, it's a matter of letting the market reveal the probabilities. Right now, the bear side carries a little more weight. Okay, no problem. But we haven't compromised any key levels on the bigger picture yet, and the potential for reversal still exists. All right, people, thanks again for watching. I will see you in the next one.